Okay, this is your morning brief for Friday, January 11th. Let's start with the Fed. Powell was on TV yesterday, interviewed, and he's given his view, and he said he sees no slowdown. So normally that would be a bit of an alarm. That means he would raise interest rates if he doesn't see a slowdown. But he appeased the market with some more neutral language, saying, "Oh well, we're going to follow the data," although they kind of always say they're going to follow the data. But he did kind of have a neutral tone, and the market seemed to like it, and it was a little more buoyant in the afternoon. It didn't take off or anything crazy, but anyways, I'm not putting a lot of stock in it. People love to follow the Fed, though, so really no change in Fed, in my opinion. Okay, futures are down just a little bit. Nothing to be alarmed about. Kind of normal. Macy's got slammed yesterday. A lot of retailers are saying, the holiday wasn't as strong as they thought. Macy's was kind of the leader in that regard. But I think it's overdone. I mean, it was down 19%. They changed their guidance on same-store sales from 2.5% to 2%. Okay, does that warrant 19% drop in a stock? They said their earnings per share, the consensus was around $4.23, and they said, well, it's probably more like $3.95 to $4. Again, does that warrant 19% decline in the shares? I mean, the company's actually doing a lot of good things. Okay, they're closing stores. Okay, fine. That's actually good. That's a good thing. When you're going to have to close stores. Yeah, you're going to have to be more online presence. You're going to have to do these things. So I totally think this is overdone. It's just overdone. It just is. So if you own the shares, I really encourage you to just hang on. Now, if you don't own them, do you need to rush into a hairy situation? I mean, it is hairy. It's they got to move a bit more online. They do have big stores. It's not the best company in the world, but it's much better than most big box companies. Much better, much. So, anyways, I still like Macy's. T-Mobile and Verizon both reported really great numbers for the quarter. T-Mobile, for instance, reported 2 million new customers. That's unbelievable, and low churn. Didn't lose a lot either. Verizon had similar, low churn and added customers. I don't know. I don't have the numbers with me off the top of my head, but I do like both Verizon and T-Mobile. They're both a little different. T-Mobile's a little more exciting. It's kind of the underdog and their fighter. I like that story. I like it slightly better than Verizon. Verizon's more, steady, big guy, just gonna make money, pay a nice dividend. Both are good investments, but they are different. And lastly, Johnson & Johnson raises drug prices, which normally I wouldn't even put as a headline at all. That's what companies do. They raise their prices over time. But it was a pretty brazen move, considering last week they admitted or were found to have asbestos in their baby powder, and they knew about it since 1958. That's a pretty brazen move to then 1 week later raise your prices. And there's pressure to lower prices from Congress and in the public. So it's not even affecting the shares at all. Shares are in pre-market, no change really. And I actually think it's a good investment, but I don't like these little things coming out. The brazenness of this, and Johnson & Johnson should be so clean, so almost pure. Anyways, it's a little disappointing to see that, but from an investor point of view, the company makes money. It's a great company. Produce a high rate of return, very consistent, nice dividend. It's hard to argue with that. That's your morning brief for Friday, January 11th, 2019.